Kimcho, and welcome everyone to weekly market analysis for the Indian markets. My name is Brandon Wendell, and I'll guide you through some of my analysis I'm looking at for the week of June 6th, again, for the Indian market. So starting off, taking a look at the Nifty, you can see on this weekly chart, basically we've been expanding kind of in a corrective mode altogether. So not really a strong downward move. Really not that. I mean, it is somewhat bearish, but not really a strong bearish move. So we're kind of correcting, if you will. Notice though, our last big rally failed to get us above 60 on the RSI. That's extremely bearish, especially after a divergence. So that tells us that the trend has shifted to a bearish trend. Notice as we're rallying back up, we're having struggles getting back up to the prior highs. You notice the move up, it's all green, but very small green candles. Nothing like we had before. So very, very weak, and that is preceding a possible move to the downside. Our next demand zone is really right around 15,000, about 14,966.90 as you see on the chart there. Going to the daily chart, you can see that we had an impulse down. We corrected only about 38.2% of the preceding impulse. That's a very weak retracement. We also had a failure to get above 60 on the RSI. So again, lots of bearish pressure there, and it looks like we're getting ready to impulse to the downside yet again and continue that downward move. Going all the way down to the 4-hour chart, even more signs were likely to continue as we came up in this retracement point. You can see that there's the kind of the pause and the origin of that selling pressure with the gap down. So we're getting ready to send our prices much, much lower, as well as the fact that we see a negative divergence here. So you've got a higher high in price, but a lower high on the indicator. That is a negative divergence. And the indicator will win out because we're trying to make highs with less momentum. That's not sustainable. So I expect that this week we're going to see more selling pressure creeping in. Basically, we can go into the components here. These are the major components for the Nifty and kind of showing us what's been leading both to the upside and to the downside. You can see that the strongest market for the past week, and that's what I did, is I set up for the past week here, we're looking at JSW Steel as kind of our leader up. We also have ONGC and Coal India, but JSW Steel and ONGC are the two big leaders to the upside. On the bearish side, what's dragging the market down has been Hero Motor Corp, Grasim, and also Ultra Cement Company. So you see those are very, very bearish. So let's take a look and see which way this is likely to go. The components, if they're likely to continue to give us that movement down, or if we're going to see any kind of strength coming back in. So looking at Reliance, which is the biggest piece when it comes to the Nifty, it's kind of the heavyweight there that really drives price in whatever direction it's going to go, is showing some weakness. Okay, basically, we've had this impulse to the upside, and you would expect this to be able to continue, except we're now seeing topping tails on the candles. Those topping tails and a failure to make a new high here compared to the previous highs is telling me that we're getting ready to start pulling back and retracing. As a matter of fact, I didn't mark it off, but if we do start falling from this area where we've seen the selling pressure coming in on those two tops, it looks like we should pull back to about 2650 on Reliance. You can see that's the daily demand. We have rally, base, and then the origin of the rally up. So I'm actually expecting to see some more selling pressure here in Reliance. That'll be confirmed if we break the low of this red candle, which is roughly 2751. So if tomorrow we start breaking down from that area, expect a lot more selling to come in. And of course, where Reliance goes, so goes the Nifty. Looking at the 4-hour chart, we did violate this supply zone, so there was a little bit of bullishness that tried to come in, but overall it's turning around now, and we're starting to see, again, more selling pressure. As we move down, we may have these little pauses along the way, and you do have some buying pressure coming in at about 2650, 2640. So keep an eye out for that area. If we come into that and bounce, if we're going to bounce, that's where it would be. If not, if we cruise through that area, then we're going to continue to push down towards 2250 and even lower, as I showed. I mentioned JSW Steel, and again, that was one of the strong securities for the week, I believe. Let me go back to that study. Yep, JSW Steel was the biggest mover to the upside, about 7.45% for the week. And you can see it right here. We had the move to the upside, very, very powerful. However, it was only a 23% retracement of another downward move. And that was predictable. We had a positive divergence where prices made lower lows, but the indicator did not. It made higher lows. So that was suggesting that we were going to get a correction anyway. However, that's all it was a correction. And it looks like we might be done. So if the strong security gives up and starts moving down, then the index is probably going to move down as well. ONGC was also another one that was very bullish. You can see we really just kind of kissed off this area of demand. Not only that, but we do have a divergence too, where prices made similar lows, but the indicator, I'm sorry, prices made lower lows, but the indicator made similar lows, and that's not sustainable. So again, we get that correction. However, the overall trend never broke. And it looks as though we're getting ready to resume the downward trend. And because we've already tested 141.20, we should be able to continue to move down to 129.65 as our next bouncing point. So if those two strong stocks are now giving up and getting ready to go down, as I mentioned, so should the Nifty. Looking at the weak stocks that were dragging us down, Ultra Cement, not Ultra Camco. I mistyped there, sorry. But you can see Ultratech Cement that we were looking at had lower lows both in price and in momentum. That is sustainable and should continue to push prices down. So I expect this to continue to sell off. The other weak market was Hiromoto Corp. You can see that we had a pretty deep retracement of 61.8% from that impulse and pulled back. Now this should be done correcting and we may get some more movement to the upside. But like I said, if the overall market is pretty weak, then this stock may go weak with it. But if there's any kind of rallying to come in the Nifty, Hiromoto Corp might be one of the buying opportunities and get a little bit of a push to the upside. We are in an area of demand. You can see we've got this basing and rally right in this area. So if we do push higher, our first target would actually be 27.96 if it gets that high. And you can see we're in bullish territory. We couldn't get back below 40 as we pulled back. So not expecting a whole lot out of the Nifty, more bearish opportunities than I see bullish, but this would be one of the few bullish opportunities that I do see. Moving on to the Bank Nifty, again, we can kind of look at the constituents of Bank Nifty, get an idea how the pieces are moving and what might move the market itself. And you can see that some of the leaders, we had Axis Bank as well as RBL Bank, they were pulling the Bank Nifty to the downside. So if you take a look at the Bank Nifty, you can see it's just been carrying on with the overall downtrend that we've been having. So we can see lower highs, lower lows, just likely to continue. The RSI, when you look at the bottom there, has dipped below 40 and cannot get above 60. So overall, it's just showing bearishness, and it's not showing any letting up of that bearishness. It's likely to just continue. So I expect more selling pressure coming up this week. We did try to rally a little bit. We only made it about 50% of the preceding impulse. Overall, prices are consolidating, getting a little weak. As far as momentum, we really don't have much, but it is bearish altogether. And I do expect to see more selling pressure coming into this week. Looking at RBL Bank, that is one of the major players here that was kind of driving the market. You can see that it did do a bit of a retracement. And now we're getting ready to continue our impulse down. We've already kind of peaked below 40 on the RSI, so that's showing lots of bearish pressure. Our first target to the downside that we're in right now on the daily chart is going to be 98.20. So it does look like we're going to continue to push to the downside and continue to go lower. And that'll drive the Bank Nifty or Nifty Bank to the downside. Yes Bank, also a player, and it is consolidating. As you can see, we've got higher lows and lower highs, but overall prices are just consolidating. So we have no real trend here, and I imagine that it's going to get drifting a little bit more to the downside along with the overall index. So that's pretty much what I got for you. If you want to follow me more, you can go ahead and do a search on YouTube for the Wendell Effect, and you'll get some more information for me. If you enjoyed this video, please let me know. Make sure you hit like and subscribe. You can also subscribe to the Wendell Effect on my other channel, Traders Mindset Association. So I appreciate you following me, and until next time, trade safe, trade well, and take care, everyone.